Hi everyone, I'm Kris Moe and I'm actually an M&A advisor and some of you might wonder what the heck is that? Well, we help business owners. Basically, we're a matchmaker and we help that business owner package up his business or her business and actually attract good buyers that is qualified, has the money, ideally has the experience to buy the business. And along the way, we're called advisors because we're advising or coaching the seller and or seller team to what to expect. Because it can go on for, due diligence can go on for months. Ideally, if we get everything in place, it can go faster than that. It can go, typically we say 60 to 90 days of due diligence, which is a deep dive for the buyer to be able just to verify all the representations of the business. So let's get into it, because I'm going to try to keep this fairly short, but I want you to understand what's involved in selling your business. My name is Kris Moe. I've been doing this for 10 years. In my very early life, I was actually a PGA Tour player. So I loved competition and traveling and playing great golf courses. And then I found this in my mid-50s. I've also done, I worked for a semiconductor equipment company in the San Francisco Bay Area. I've always had a fascination with people that are designing and building things. So that's what kind of led me to focusing on solar developing companies, even roofing companies, HVAC companies. And in today's time, they're synergizing those businesses. I'm actually seeing solar businesses that want to buy roofing businesses, and I'm finding roofing businesses that are looking to buy solar businesses or HVAC businesses. So building commercial or residential, building upkeep, renovation, servicing is really hot right now, and this is the beginning of 2025. And I expect that's going to be the same for the coming years with whoever happens to be in office. So let me share my screen and we'll kind of get into just what is involved with exiting your business. So let me bring up this. So the blueprint for selling your business is, and this is why it's good to have an advisor. And part of what I'm going to be doing as an advisor for someone selling their business is going to help them feel comfortable. What are the steps coming up? It's very much a relationship that can be very intimate, because you're sharing a lot about what you've built up over the years. You might have a relationship like that with your CPA, a lawyer that you have a lot of confidence in, a wealth manager if you're already there. So it's a good idea to feel comfortable with your advisor, that you trust that they know what they're doing, they've done it for a while, they've had success, because your advisor can also be going to be leading you to some other advisors or professionals along the way if you don't already have those. So I mentioned kind of the market trends. Right now, there is a lot of interest with investors And I deal a lot with investors that are, some of them are billion-dollar companies, and some of them might have 50 or $100 million to buy up companies. So right now, anything to do with building surveillance, building upkeep is very popular. It's very buyers are feeling more comfortable. It's so different than pharmaceutical or software or other businesses like that. Quite a few of these investors have quite a diversified portfolio, and they might have software, but they want to have something too that is probably less about growth and probably just more about predictability, because people need roofs replaced, people need servicing of whatever in that building. So, and it's if a business has been doing this for 30 years or more, that gives them a nice warm fuzzy feeling, and that's why I'm talking to a lot more buyers, especially in a space that I'm focusing in, which is solar. Um, Solar, aside from my own solar installation and fascination with being able to provide my own energy, it just makes a lot of sense to create your own energy and not be reliant on utilities. Here in California, it's a bit very expensive, and our power goes out periodically, and we got tired of that, so we got our own system. Let's just get to the next slide. This is what you can take to the bank right now, is you want to get your financials in order. Just, and that's what an advisor is going to help. Think of us as kind of like a doctor, and the doctor is going to check your weight. They're going to, check your blood pressure, all the kind of basic questions about, your health. Well, we're going to ask the basic questions about your business. And right away, the vitals are going to be, how good are your financials? How good is your backlog? What's your business looking like for the next quarter or year? These are just so important. How good is your team? The people working there, are they aging out? Are they just coming in? Is it a nice, balanced mix? You want to have these vitals in order. And if they're not, we're going to spend some time. You're going to get some feedback from someone like me to say, hey, you got to clean this up. The owner's too involved in the business. And I mean, I got a perfect example of that. I have an owner of a solar company, and he is a one-man show, and he third parties everything out. He's very lean, doesn't even have vehicles, and that is not attractive to a lot of buyers. They want to be able to step in, but they want to have a machine that's already running for the most part, that's profitable, that has redundancies. So if Joe leaves or your project manager leaves, you got somebody else to take their place, that's going to fill in. So operational, how you looking with, you know, backlog and all that stuff. How good is your team? Chemistry, all that stuff's important. Ideally no litigation, employees are happy and all that. Financials, that should be probably in my mind number one. Financials are the biggest thing that trips up businesses. Of course, you got to be profitable. You're going to get a multiple of your profit. That's what it comes down to. So, you don't want to be on the slide going the wrong way. Perfect example. I had a business that's in 2023 did great. Had one of his best years, and I wouldn't say he got complacent, but the industry got a punch in the gut from regulations and things, and the whole industry suffered. Well, fast forward a bit, I got plenty of buyers for his business making offers. But at the end of the day, the darn banks saw the slide in his sales and profits, and what they would lend on went down and down and down to a point where, and now I can't even get a loan for his business because they said, "Hey, look at, we need you to bring the sales back up before we get back on board with lending." So, um, ideally, you're selling your business as it's climbing. If it's not, expect to get a big discount. You are going to get pretty low offers, and maybe you'll take that offer. Um, so we'll get into offers a little bit later, but let's just talk about prepping your business. So your operations are in good shape, your financials are clean. Sometimes we'll even suggest that you get a third party to look at your books. Frankly, an advisor like me can be that third party look at your books. But for a real deep dive, the kind of deep dive analysis that you're going to get from professional buyers, you might have to spend 5 or 10,000 to get a really good look at your books from the standpoint of an investor, not from, whoever's doing your books. Is an unvarnished look at your books. What needs to be fixed up? Are you on cash? Are you on accrual accounting? All these things are really important. If I ask you, I need your P&Ls, monthlies for the last 3 years, I expect to get those. If you're not really ready to deliver on that, you need to get into your accounting and dial all that in, because you're going to be asked for financials in every possible way you can imagine it. Whether it's P&Ls, balance statements, your sales for the last 3 years. Of course, you can have that anonymized, but you're going to have to. So part of what we're going to do is we're going to take all this data and we're going to preload it into a data vault. And so after they issue, a good offer that you like, everything is pretty much ready to go. And there's even like a pre-due diligence before we even sign the offer, that we want stuff in that data vault ready to go, because they want to move fast, and ideally you want to move fast, but everything has been preloaded. We won't have these delays of a week or 2 or 3 weeks because somebody's too busy to get around to doing it. So that's kind of part of getting your business ready to sell. And part of what we do to coach business owners up is like, look, if you're going to sell your business, this is going to be part of your day, is going to be ready to respond to a lot of these requests. So that's just part of the deal. I mean, it's uh, time is of the essence. And as soon as you lose momentum from a buyer, a good buyer, they're going to move on quite often. Okay. So legal readiness, I think contracts, all that stuff is going to be in place and looked at. And that's part of what we're going to do too, is part of the due diligence initially of us on the buyer or on the seller, is making sure the documents are in place and what's missing. And maybe that's what delays things, at least until we put it up on the market. We want to be ready with, there's a pre-due diligence and then the due diligence items list, which we can talk about at some point. Okay, let's move on to the next one. And why isn't it working? There's a lot of factors affecting this business value. We're going to give you, or I'm going to give you, a very good sense of what that is. Quite often, I'll just use let's say HVAC residential business. If you have a business that's doing about $1 million in EBITDA, and I'm going to go with EBITDA to begin with, And that just means essentially your profit, uh, along with what it would cost for the investor to to pay a manager to take the seller's position, that compensation. So that's what EBITDA is. SDE, or seller's discretionary earnings, are really your profit, what you pay yourself, um, all the little perks that come in the business. That's really essentially the difference between EBITDA and SDE. For smaller businesses, they're going off SDE because somebody's buying an income or they're buying a job for themselves. The businesses that I'm typically selling are usually investors or um, private equity companies that are they're not going to be working in the business. They're gonna hire somebody in, and so that's why they use EBITDA. So let's look at the on the left side there, value increasers. Ideally, there's not a concentration of two customers of your business. In the businesses I'm working with, that's usually not a problem, but in manufacturing and in a lot of other logistics, if you're reliant on one or two customers, you're going to be getting a discount. Um, your customer base is, I would say, probably in construction or the trades, it's really more about reputation. If you got a good reputation, whether it's reviews or you've been doing it for 20 years and you have, you know, um, you know, 4,000 customers in your customer list that will pretty much all vouch for you, that is going to help the value of your business. Yeah, I mean, low debt, I think that goes without saying. Um, value reducers, we talked about customer concentration. Um, I would just say poor or messy financials. I can earlier in my M&A career, I took on a lot of businesses, and boy, did I get caught up in a lot of mom and pop accounting that I've learned my lesson. Just I don't want to go there because it serves nobody to have financials that aren't really clear. So I'll emphasize that again, how important that is. And then owner dependency. If the owner is the sales guy, I got a roofing company right now. Nice business. Sounds like he's doing about a $500,000 in profit, and smaller business, but he's the guy, he's the sales guy. And that quite often has been the case, but I'll just give you advice. If that's you, start training up or bring somebody in that you can train up to fill that role. We want to make you the seller as redundant as possible, even though quite often the buyer is going to probably want the owner to stick around for 6 months or so or more. Private equity guys would love for you to stick around for 3 years and probably give you a nice compensation and also wish you keep a part of the company. So as the company grows, you'll get even more from that, increase in value of the business. So there's EBITDA, and I told you there's the ones we go by are I'll just is right here, the EBITDA. We're not really using EBIT or all these other ones really at all. So someone, they are going to pay attention to what your gross profit is. They don't want to see that your gross profit is, margin is like 8-10%. They want to see a nice hefty gross margin of, you know, 50% plus. But the solar companies that I'm selling, they're down there closer to, 30 to 35%. So, every industry is a little bit different, but that's gonna have an impact on the multiple. Typically, the range for a trade business, and I can kind of lump them together: electrical, HVAC, solar, um, pretty much all these. Even flooring, They're a pretty similar multiple. And they're usually, I'd say for businesses doing a 500,000 or less EBITDA, they're doing on EBITDA probably 2.5 on the low end, probably 4x on the high end. As that EBITDA or profit goes up, so does the multiple by probably 1x. So let's say you're getting up to closer to 3 million EBITDA. That's where you bring in a lot more investors. That's kind of their for quite a few of them, their minimum. So 3 million EBITDA is probably going to be, it's going to be closer to, 3x on the low side and probably 6x on the high side. Pretty wide range, but that's where we start getting into the nuances of your business. The strength of team, how long you've been in the business, how good's your, reviews and all that. So, I'm going to be conservative and just give you a nice wide range, but there's certain things that definitely can put you above that threshold. And there's certain things that'll maybe drop it through the floor, for various reasons. How much equipment do you have? I'll give you an example. I have a company doing about 13 million in sales and probably over 1 million in backlog. I'm sorry, he's got 11 million in backlog. He's got 1 million in AR, and his inventory is pretty light. But the balance sheet means a lot. I'm going to compare that against my smaller business, the one I mentioned that's very lean, and he really has no inventory. His AR is maybe a couple 100,000. Even though their EBITDA mid last year were pretty close to being the same, it was a completely different model. One business had 50 people and probably close to $2 million in trucks and equipment, and the seller owned a really impressive building. And then the other, the contrast to that is contributing to the, value is a much smaller machine. It was really more of a sales org, with third party, installations. And sure, that could work, but that might be ideal for a buyer. But in my mind, most buyers are looking for an operation. You're going to bring more buyers to the table, or at least look at your business, with the larger operation. And let's face it, it's not easy to get to an operation of 50 people. It's takes a lot. There's a lot on the line when you have, payroll, working capital for that business is probably close to, $500,000. So, but that's the advantage of the lean and mean one. His working capital is probably very small, and if he has a couple down months, he's not going to, have to take a business line of credit or something to get through. Some buyers are going to want to make it a stock deal. Um, Quite often it's an asset sale. Buyers are afraid of stock sales because they have to put in their offer everything to protect them against any liabilities. And frankly, that's not that big a deal. That's why you have a M&A transaction attorney to help you with that. An asset sale is kind of what it says. They're going to be paying you for, essentially your equipment. They're paying you for your accounts receivable. They're paying you for your inventory. They're paying you for all the years of building up your business and contacts and practices and all that stuff. So that's and that, frankly, I'll kind of jump ahead a little bit. That's kind of what's involved in the offer as well, is the purchase price allocation. And that's how the government is going to basically tax you on the proceeds from your sale. But we'll put that aside for right now for the sake of kind of getting through this. Earnouts and seller financing. This is going to be, you're not going to get all cash for your business. You're going to get typically half down in cash, and you're going to get probably a balance of they'll want you to carry a note, or they're going to have some earnouts tied or performance metrics tied in. So if you hit, let's say you have $1 million profit business, they'll say, okay, we're going to give you another 15, so you say 15% in our offer if you hit this number. So if you don't hit that number, you'd get either a fraction of that amount or maybe none at all. But that's part of the creative offerings you're gonna get. And you can be just as creative coming back. I mean, that's kind of how we're gonna be covering for you, is you say, hey, Kris, this is what I'm looking for an offer. If you just want cash, sure, you can get all cash, but you're going to get a lower price. So if you're willing to stand behind your business and know it's going to do well in the future, you're going to get a higher offer. And when it's tied in with earnouts, there's also some, wrinkles that go with that, and we won't get too deep into that, because what's the earnout going to be based on? Because when the new owner of the company comes in and they decide to spend a bunch of money on something, and then the profitability of the business goes down, well, it's going to be hard to hit your earnout. So there's some protections we can put in there for you. So don't get too concerned about that. And there's, in the last bit there, negotiating terms, the purchase price allocation. Essentially, the more that you can put towards goodwill, that's going to be taxed at a lower rate than, say, equipment. So the buyer and the seller, I mean, you can just Google this, put in purchase price allocation, you can see the breakdown of what that is. I know a lot of you are new to this, and so that's okay. You've been running your business. This is what I do. But frankly, for very nuanced type of, whether it's legal or accounting questions, I'm going to defer to those professionals. And if you don't have those professionals in place, I'm going to suggest some, because they are crucial in you want them to be advising you along with what us M&A guys are going to be doing in getting you to the finish line, to help you get as much as possible in selling the business after tax, and getting cashed out as soon as possible, and not having to, stay in the business longer than you really want to. So that's what this is all about. Ideally, I put a big, happy, smiling golfer face there, because that's, whether it's golf you want to do or fishing, and this is what it's all about. You've built up this business to get to this point, and ideally, your money is going to be making a lot of money to a ripe old age, so you can get your handicap down and all that stuff, and play with your grandkids and go to all the places you want to go to. But life after sale is, you're going to have to be involved with the transition. You're going to have to help your employees feel comfortable with this, that this is a good thing for them. You're probably going to lose a handful. That's just part of the deal. And buyers should understand that, because quite often the employees are loyal to the seller. Financial planning, ideally, you're getting someone that you can talk to on this. on the front side rather than after this all happens, because that'll help us in our strategy of getting you the deal that is going to make sense. And who knows, maybe you're just using this to, you're not retiring and you're just going to explore something else. But ideally, you're ready to do what the heck you want to do, and your business continues thriving, and you cash out for an amount that makes you happy, your wife happy, and all that. So, really, let's just put a nice bow on this. I've written a book on how to sell. I've written 4 books on how to exit. One was on HVAC, another one was on solar, another one on electrical, and another one on plumbing. If any of those are in your wheelhouse, reach out. You can email me at Kris, Kris at horizonmaa.com, or my phone number is 707-529-6458. I'm happy to walk you through this and see if there's a fit between what I'm doing and what you'd like to do. I also have a brochure, but frankly, the book's pretty good to read through. It's not very long, but it's got everything I talked about here just in more detail. So I appreciate you watching, and I wish you all the best, and hopefully we'll see you sometime or get you on the phone and help moving you down the line to selling your business. So thanks so much.